I made over $6,000 on this trade, and it took me less than 10 minutes. And this wasn't a lucky shot or a one-time fluke. This process is exactly how I nail multiple A-plus trades every single month. Other traders who saw this move either chased it late, froze, or chopped themselves up into a loss. The difference is I didn't rely on my own analysis or opinions. I followed a clear framework that can be used again and again for every single trade. And in this video, I'll break down the whole process step by step, so you can copy this exact process in your own trading immediately. Let's begin. If you're new to this channel, all I talk about is level-to-level trading. This is just taking a clean, mechanical trade from one supply and demand level to the next and doing that over and over. I go into detail on exactly how and where to find these levels in other videos, which I'll link here for you to watch later. Supply and demand levels are absolutely critical to what we do. But what's important when we're trading the LCE model is knowing what type of trade we're in. You see, no matter what, there are just two types of trades that exist: breakout and mean reversion. Price will either return to the level it just came from or break out to the next level. Every trade can be simplified into one of these two. And these are two distinct types of trades that need to be treated differently. But traders either don't know which one they're trading or treat them the same, both of which are fatal mistakes. If you want to nail A-plus setups over and over and not get bogged down by constant chop and losses from other trades, you're going to need to know the difference, and you're going to need to know it well. Breakout trades mean that the price is breaking out of a key level or range. And what this means from a technical perspective is that the dominant force, which would be buyers in this case, are buying in large numbers and pushing the price up. At the same time, all of the shorts that gathered at these highs are underwater. They get nervous and get out of these shorts at a loss by buying to cover, and the price gets fueled by even more buying pressure and moves even higher. Now there is no resistance above, and the price has tons of fuel to keep moving higher. And it will run virtually unopposed until it hits the next supply and demand level. Then here, there's a higher volume of sellers that'll come in and slow the price down as buyers get exhausted. At this point, the whole process restarts, and we need to decide if the price either continues breaking out or reverts back to the mean. The levels are like our checkpoints for when the price decides to do this. That's why they make such accurate targets. So that's what a breakout trade looks like. When you're in one, it's pretty much as close as you can get to a perfect trade. It'll usually move in your direction immediately, or at the very least not range for 3 hours and harass your stop loss. The risk reward is usually super high, and you can move your stop loss to break even pretty early on and have a safe, risk-free trade. It'll usually run to your target and beyond. So when you're in a breakout trade, you can have a wide target, a decently tight stop, and move your stop loss to break even safely once the trade moves a decent amount in your direction. Now, a mean reversion trade is completely different. This means you're returning to the level that you came from instead of breaking out to the next level. You've essentially failed to break out of a key level or range. That means there is no dominant side, since it failed to break out or didn't even try, and we're now back into the range. That means price action is a lot more random and less directional. Some traders treat this like a breakout in reverse and think they can play by the same rules, but this is a huge mistake. In a mean reversion trade, you don't have momentum on your side. You'll need a much wider stop, you'll probably eat some chop, and have your stop loss harassed before it finally moves to your target. If you move your stop to break even here, chances are it'll get stopped out before you can even see your trade work. I've seen this happen so many times, where the traders are correct, but don't manage the trade properly and end a profitable trade in the red. This doesn't mean it can't work, but you just need to know what type of trade you're in and play by those rules. A breakout will usually move swiftly in your direction, while a mean reversion trade might or might not. It's more of a coin flip. For this reason, I only take breakout trades. Mean reversion trades are fine, and I've seen many traders apply the LCE model with mean reversion trades successfully, but as a personal preference, I only take breakout trades, and that's the type of trade that made me over 6K in just 10 minutes. So now let me show you exactly how I did it, step by step. So this is on ES Futures, which is one of the best and most popular assets to trade. That's what most people who trade prop firms like TopStep, Apex, Lucid, and others use. The process goes like this. First, I only trade from 9:30 a.m. to 4 p.m. Eastern, or regular trading hours. This is what the chart looks like right before the open. I don't do any type of pre-market research or analysis. I simply take the market as it is. I don't even know what the chart looks like before the open on most days. And it doesn't really matter to me since I'm not trading during that time. Since we're trading LCE, what we're looking for here is a level-to-level move. And specifically, I'm looking for a breakout trade. So, the first thing I do is make a quick projection of where price could potentially move to. Right here, we're in the middle of a range. I'm not interested in taking trades in the middle of a range, so I avoid price action here entirely. For a breakout, we would need to see price either break out of this supply level and move to the next one, or break under this demand level and move to the next one. These are the two types of trades I would take on a day like this. If anything else happens, I'm not interested. If we fail to reach either the supply or demand, it means that the price will just keep ranging and orbiting this middle level, and will likely be very choppy and cost us a lot of money. If price breaks to either level and shows momentum, then we can get a clean breakout trade. So what do? I just set two alerts. I set one at supply above and at demand below. I do this right before the open at 9:30, then I turn my screen off and do something else. The chart doesn't need my attention. If it doesn't hit my levels, then I won't need to trade. In that case, staring at the screen would be a waste of time and energy, not to mention extra stress for no reason. If it does hit my levels, then I'll engage. But in the meantime, I don't look at the screen and keep a fresh mind. It's more important than you think. Now let's see what happens here. So we range a little, then break out. I got alerted around 10 o'clock that the price finally broke into supply. I open my screen, and this is what I see. Now, what I'm looking for here is a breakout trade. I'm not interested in a potential mean reversion trade here. That means all I need to do is look for confirmation that the price will indeed keep breaking out and not fail or reverse. What I use for this is pretty simple and quick, which is the EMA cloud. This will instantly tell me the trend direction, as well as the strength of the trend. So here it's actually interesting. The EMA cloud is sloping up, which tells us that it's bullish. However, it's a little far away from the price. And that usually means that the price could be overstretched and might snap back, like an elastic. Now, this doesn't mean that the price will automatically reverse or anything. Everything is still bullish, but the market is telling us it's a little overextended. If the market is trending and has tons of structure behind it, then being overextended isn't enough to stop it. That only happens if the cloud is flat and there isn't any trend structure to support a move higher. What usually happens is that the market moves sideways and consolidates, so that the cloud can naturally catch up and form a support base for the next move higher. So for now, this is telling me that the breakout is still valid. It might break out immediately, or it might consolidate, then break out, but it doesn't matter to me. I don't care what price does in between. I just need the odds on my side. And right now, the market has strong bullish momentum, as well as trend structure supporting it, and a bullish cloud. It's a binary choice. Price will either move to the next supply, or it'll revert back to this demand level. And now we see that the odds point to one direction rather than the other. That's all the info I need. So what I do here is enter long right away and place my stop a safe distance under market structure near previous highs. I place my target at the next supply level. Then I turn my screen off again and wait. There is no need for me to stare at the price while it moves. And honestly, it'll probably just get me overthinking and maybe make a bad decision. Instead, what we're doing here is just letting the trade play out. We're actually forcing it to play out because we can't interfere or see it. A lot of problems traders face are just from staring at price action too long, because price action itself is deceiving. It will never go exactly the way you want it to, and it'll make you feel uneasy. You need to trust your own analysis and trust your levels. If you get influenced by random candlesticks and make different decisions based on that, you'll never see your system work the way it's supposed to, and you'll eventually get lost in the randomness of price action. So it's very important that you only engage with the market when it hits a level, enter your trade and set it up, and do nothing in between. Now let's see how this plays out. Notice that it takes some time to hit the target, but we eventually hit it. The price doesn't move up perfectly in a straight line, but it does move up. Whatever the market does in between, it doesn't matter. By the way, if you want to apply this exact system in your own trading, you can apply to work with me. I've helped tons of traders do exactly that. They go from red or inconsistent to finally getting funded and consistently pulling payouts. It's a one-on-one program where we'll build you a custom trading plan, have weekly calls, your own private chat to communicate with me at any time, and access to this exact chart to trade with. If you trade ES and you're interested, click the link in the description. So I just went long here and held long until the market gave me what I wanted. And that's how I made over 6K on this exact trade. Keep in mind, this wouldn't have been possible without the right levels in place, because the levels tell you where the price goes next. That gives you the confidence of knowing that you'll get paid if you get the direction right. You don't need to be constantly monitoring the price or worrying about when the market will finally reverse, or having an arbitrary target like an obvious high, which probably won't work because everyone can see it anyway. So that's the full breakdown. Repeat this exact process every day, and you'll begin to notice high-quality setups where the market leans in your direction and you can take a highly profitable trade easily. Then just ignore everything else. It's better that way. The trade itself took longer than 10 minutes, but I spent less than 10 minutes on my actual screen looking at the chart. I just looked at it when I got alerted, assessed the market, and entered the trade. Thousands of dollars in profit for a few minutes of screen time and barely any stress. Not bad, right? That's what happens when you've got the right levels in place and a process that actually makes sense. You don't need to stare at the chart. You don't need to micromanage the trade. You just set it up and let the market do the work. If this helped, make sure you drop a like and hit subscribe, because I drop videos like this every week. I'll see you in the next one.